Hello, everyone, and welcome back to the Financing Freedom channel. Today, we're going to dive into what we're going to call the Options 101 series, where we look into and work to understand what options are and maybe a little bit of how they work. Now, options use a lot of jargon and they seem really confusing, and I think that deters a lot of people from trading them. However, once you get into them, kind of like anything else, they're not nearly as complex as they may seem and are rather simple to manage. So, what are options? Well, the technical definition is that options are financial derivatives or contracts that give the buyer the right, but not the obligation, to buy or sell an underlying asset at a predetermined price within a specified time frame. Now, what does that even mean, right? I can just feel the air going out of the room. So it means that you can either buy or sell a contract for 100 shares of whatever it is that you might be trading at a price that you get to choose on a time frame that you also get to choose. And then you can tailor that to be something that benefits you, right? You kind of already get the answers to the test before you take the test, which really is quite nice. And then all you have to do is understand the asset or the stock or whatever it is that you're buying or trading. And you can pick the parameters at which you want to trade it and then structure it in a way that benefits you the most. So options are kind of like cheating a little bit in a way when it comes to the market. And you can stack it in your favor, which is really nice. So, how long have options been around? Well, believe it or not, options have been around since 6th century BC. There was a Greek philosopher named Thales who used these options to get the right to olive presses. Now, he wasn't a farmer, but he would speculate based on weather patterns on what the upcoming olive harvest would be. And so he would buy the option to use these olive presses from the owners of the olive presses. And then, as the harvest came in and things were kind of picking up pace there at the harvest season, he would then sell the rights to use these presses to the farmers and would make quite a substantial amount of money on it. So that's where options came from. And ever since then, they've grown and developed to be the derivative based asset that you can purchase and play with today. So with options, one of the big components is time, and that breaks down to expiration dates. And there's also a value that's given to them because of that expiration date. So the time component of the options that adds value is called theta. It's one of the Greek letters that is assigned to it. And with theta, the option begins to decay more in the last 30 to 45 days before expiration. So when you're trading these options, you want to kind of target 30 to 45 days out before expiration because then you get the most time decay. If the price sits at the same every day, doesn't move, but with each passing day, it will lose value and thus, I guess, either making or potentially losing you money depending on whether you're an option buyer or an option seller. So the time component's really big. It's very important to take note of. And the notation of theta will tell you how much value the option loses every day. So if it's 0.01, then the option will lose a penny every day per share, or for the entire bundle of 100 options, it would lose $1 a day in value just because of that time decay. So if you're the seller of options, this will make you a lot of money even if the price doesn't even move, which is pretty exciting. So how are option expirations determined? Well, generally the monthly option or the traditional option expiration date is the third Friday of every month. Now, if an option has more volume, then they can expire weekly. If there's a lot of volume traded on a specific stock, and options are being traded more heavily, then it could be a weekly expiration on a Friday. And if they have just a ton of volume, like say the S&P 500, then you can have daily expirations. Then there are also leap options. These are long-term options that are several months out, and they can go as far out as 2 years. So with leap options, the technical time frame for these is 12 months and further out. So 12 months to 2 years, that makes it a leap option. And so it's an extended expiration date on that. Now, there are two different types of options. There are call options and there are put options. These are kind of the big definitions when it comes to trading options. And these, you're either going to buy or sell calls, and you'll either buy or sell puts. So these are the two types. Call options, these give the holder the right to buy an asset at a specified price before the option expires. So if you buy a call option, this means that you own the right to buy 100 shares of your desired stock at the price you choose at a time that works for you. And if you're selling a call option, then you are selling the right to someone else to buy the stock, which hopefully you own, at the specified price at the date you choose. Then there are put options. Put options give the holder the right to sell an asset at a specified price before the option expires. And if you're buying puts, this ensures that you can sell the stock at a specified price. And then this is helpful if you're worried that the price might move unfavorably on you. Maybe it's going to go down. So you're going to buy the put so that way you lock in the price that you can sell it at. Then if you're selling puts, this means that you'll buy the asset at the specified price on the expiration date, if that makes sense to you. So these are our definitions of call options and put options, and a little bit of what buying and selling puts are like, and a little bit of maybe why you would do this. So again, this is just a high level overview, a little bit of some definitions, a little bit of introduction, if you will, into options. And in the upcoming videos, we're going to break down what are call options, why would you buy and sell them. We'll give some examples, and then we're also going to do the same for put option. What exactly are they? Why would we buy and sell put options, and how can we use these to benefit us? So keep following along. We're going to dive into those videos and explain these options and options trading a little bit further. So thank you for joining me today in this options overview video in our Options 101 series. I hope that you subscribe and watch the following videos to learn more about options.